Welcome to the Foundry, where leaders are forged daily. And now your host, George Roberts.
Welcome back, entrepreneurs. Drew White is founder of TenFifteen Properties. He is also a former pediatric oncology nurse turned modern wealth consultant for real estate investors, business owners, and athletes. He teaches people the infinite banking concept and strongly believes everyone should become their own banker because all the other ones suck. Drew wants to bring banking back to the you and me level. Graduating nursing school with $150,000 plus in student loan debt led Drew down a path to entrepreneurship, real estate investing, Bitcoin, and infinite banking. Welcome, Drew.
Hey, George. Thanks for having me on, man. Really appreciate it.
I'm really excited to interview you today because this is one of the more different guests that we've had on the show. I know that you are a real estate investor, but you also specialize in something called infinite banking, which may be unfamiliar to many of our listeners. So before we get to that, why don't you tell us the story of Drew?
Yeah. Well, I was born on a cold, wintry night. I'm just kidding. I'm not going to go that far back. Yeah, so I mean, you mentioned it in the intro, but really my, kind of financial journey, I guess I would say that, led me to where I'm at today, started with graduating nursing school. Had that 150,000 plus debt that you mentioned. And I remember sitting down with my dad who, he was a pastor, so he didn't come, from a background in finance. And, but he knew a little bit about Dave Ramsey. And so I'm not as big of a Dave Ramsey guy today, but, back then it was a helpful kickstart. And so we sat down and made a budget, and it was like, oh my gosh, half of what I make is going to go to my loans. Like, what did I do to myself? And we won't get into it, George, but I was like, why was I allowed to make this decision? Like, I wasn't thinking about money. Everybody was telling me, oh, hospitals will pay your loans back, and that didn't turn out to be true. So, I was only making like around 35,000 a year. And, so then that really sitting me down and teaching me a little bit about Dave Ramsey really kickstarted my whole like financial, education and wanting to learn more and lit a fire under me. Cause I was like, I can't really accept this as my lot in life, that I'm just going to be this guy who has this huge amount of debt. And just accept that, so really I started, and that like really led to personal development, personal growth. And it was, it was like a 10-year journey, and I'm still on it, but, definitely. And one of the things with the Dave Ramsey way, I went Gazelle style. I paid off like all that debt, met my wife, added a little bit more of her student loan debt. And, but one of the things I realized when I got with the Dave Ramsey thing, I got to zero, and I was like, well, now what do I do? So then that led me to looking at like, what are other people doing? What are wealthy people doing? And reading about real estate and all of these things. And so, I didn't have a great, I would say, understanding of debt and leverage for a bit, and I still had scarcity. So I first started out in real estate by flipping some mobile homes and providing notes, found my way to the infinite banking. And now my wife and I are, here today where we're trying to find some kind of multifamily apartment here in Omaha where I live. So that's kind of the overview of the last 10 years. And I just gave up my nursing license last year because I was just loving the infinite banking and teaching people it, and knew real estate as well. I was like, those are just things I want to do long-term, and nursing didn't really fit that for me anymore.
It's great. And I like the Dave Ramsey angle. A lot of people in our business, they like to put him down, but he's got a lot of great ideas. He'll teach you the difference between good debt and bad debt, teach you to live beneath your means. Yeah, it's easy to forget when things are going well.
Yeah, it's not, it's like with anything. You got to take the good with the bad. There's some things I don't maybe agree with him on anymore, but he definitely helped kickstart me on that journey, and I'll be grateful to him for that. So
yeah, awesome. So then at some point, like you said, you found this infinite banking concept. Tell us about the genesis of that. So was it like an aha moment, or you were just maybe studying all these different things and this one popped out?
Yeah, I'm pretty much a questioner by nature. So like, if you tell me, that I need to do this for this reason, I'll probably ask you why. You need to tell me why, and that's how I was as a nurse. They would come out with these new policies or new things we had to do. And I'd be like, well, why are we doing it this way? Why are we changing from? So I've always been a questioner. So I really found it on just a short podcast. I was getting my steps in while my kids were playing at a playground, and I was listening to it, and it said, "Become your own banker." And I was like, what is that? And so I listened to it, and I was skeptical still right away, but I thought I'll hear them out. So I, booked a call with these guys just to hear them out a little bit more. They sent me the book by Nash, who's the founder of Infinite Banking, called Becoming Your Own Banker. I was halfway into that. And then that's when, like you mentioned, I had that kind of aha moment. It was like, oh my gosh. I was like, this makes so much sense. And then it's funny because as I'm continuing to read it, I told my wife, I was like, I not only want to do this, I was like, but I've known for the past 10 years, I really wanted to do something in finance and teach other people, but I knew I didn't want to be a financial advisor. It just wasn't, a good fit for me. And so I was like, I think I want to teach people this. I know it's crazy. I barely know the concept, but I'm like, I want to teach them. And so, yeah, so it's kind of one of those things. It's like, as Nelson lays it out, and you get a sense in the book of like the character that he has, that he's just this very high quality individual who really cares about people not getting ripped off, really. It just kind of made too much sense. And so and then I kept doing a deep dive and reading more about it. I also looked up like, what are the opposite views of this? What do people say that, are against infinite banking? Because I didn't want to just be like, yeah, I've only read guys that do it. Right. And so I read the negatives on it. And so that's kind of how the genesis of it first really began.
Right. That's a very exciting story. You mentioned the founder of the infinite banking concept, Nelson Nash. As I understand, this is something that's only less than, say, 40 years old. It seems like the propensity for this has existed in the past, right? Whole life insurance has been around a long time, but he really came along and said, hey, there's a way that you could use these policies and basically get double use out of your money.
Yes. Yeah. So, and it's one of those things where like there were wealthy people doing it, but there really they hadn't created like a concept for, maybe everybody else. Right. And hadn't realized that there's a way that everybody could do this. And, like Walt Disney, no one would give him a loan. I think he had, I don't remember his whole history, but I think he had a few failed attempts at businesses. And so no one would give him a loan. And so he took a loan against his whole life, like out of his whole life policy to get Disney started. Pampered Chef did the same. There's quite a few like that. But yeah, so he really, he created the concept. In the book, he talks about it like basically out of desperation back when interest rates were like near 18%. And he had a real estate deal gone bad. And he was just kind of down on his knees praying to God, like, what do I do? And his brother had hooked him up with a whole life policy that really he only bought because it was from his brother. And then he just kind of realized, I have cash value in my, whole life policy. And then this whole concept really birthed from there, about taking back the banking function in your life. And, and it's really like, I know I haven't gotten into it, but it's centered around, it's like when you put money into a bank, you're basically loaning them your money, and they're going out and making money with yours. And then they're going to kick you back a measly, 0.1% or something, right? Something crazy. And so, basically Nelson's like, hey, let's take that and put that in our own system where we get the benefits. And so he really, and he has there's so many good concepts in his book that I probably can't even hit on in a podcast.
Yeah. So you also kind of hit on how banks are making money. And it is kind of crazy. I mean, when you first introduced to the idea of fractional reserve banking,
yeah,
it sounds like magic.
Right.
And
it is a little bit.
Maybe there is a little bit in there.
Yeah.
But explain to us, how do banks make money, and why is banking in general such a great thing?
Yeah. So, we say banking is the best business in the world. And probably the most profitable business in the world, or one of the most. So every time, like I mentioned, you make a deposit or you give money to a bank, well, they can go now lend out that money about 7 to 10 times. Right. And that's kind of the fractional reserve banking part you talked about. If people want to read up on it, there's some really good books out there about like what government has done to our money and things like that. But that's kind of the basis of it. So they are now allowed to, basically create more money and go out and loan more money. And so they're taking, your hard-earned dollars that, and I never understood this. I thought I put, 10,000 in the bank and 10,000 just sitting there waiting for me. Right. But that's not what they do, because they keep money in motion. So they immediately put it in motion, immediately go out and make more money with it. which is a huge lesson that I think I've learned from wealthy people, is that you got to keep your money in motion. You can't let it sit and stagnate. So, your 10,000 should never just be sitting in the bank accruing 0.1% interest, because so many reasons, but one of the main ones, they just reported inflation's at 6.8%, right? So, so really, so banks, back to what you said, banks, they go and lend it out, they put your money in motion, and then they just, basically kick you back a little bit percentage for you lending them your money. And so, one of the tenets of infinite banking is put it in your overfunded whole life policy, and do the same thing. Don't leave it there stagnant. Go and put it in motion. Go buy real estate, go buy businesses, crypto, whatever you're into. So, but that's kind of a little bit overview of how they work.
Right. So then you're mentioning the whole life policy and how you basically souping this up. This is not an ordinary whole life policy. So you've got your death benefit on the one hand, and I think you also did mention the cash value, and that overfunding. The idea there, of course, is to goose that cash value, get it up as quickly as possible, and start borrowing.
Yeah, that's exactly right. Yeah. So you overfund it for, and everybody's situation is different, but, we say 2 to 4 years. 4 is going to be the most ideal. And a traditional whole life guy, and even like, this is something where I disagree with Dave Ramsey a little bit, but he rails on infinite banking, but the examples he gives are traditional whole life insurance. And that is not, it's not a great deal for anybody. And I would not recommend doing it. I would recommend having it designed a specific way. And that's what, we do, is we design it specifically so that you can get that cash value built up quickly. And then, you get this, it was 4% tax-free guaranteed. There were some law changes recently. Some companies now do, 3% plus dividends. But you'll see that the great part of the system is you get, you have uninterrupted compounding interest, and most real estate people and entrepreneurs get compound interest is important, right? And so, whenever you use that money, you're really basically putting a lien on that money and using the insurance company's money. So you can never stop interrupting, or you can never interrupt that compound going on inside of your own bank.
Exactly. So you're really getting the best of both worlds. You're getting the access to your money, and they're literally giving you a rate of return, maybe 4% on the money, even when it's out, even when it's borrowed.
Yep. That's exactly right. Yeah. And so we say it's an and asset, because, you get, and some people, it's like, they're like, well, what, this is a Ponzi scheme, or, it's crazy. And I had a young guy ask me, like, well, why did I do this when I could 10x my money elsewhere? And I said, I'm not saying do either or. That's what you're saying. I'm saying do both. Like, put it here, but then, keep up your behavior outside of the banking system, your policy, and go 10x it. Absolutely. But you get both benefits. Why not?
Awesome. And so one of the things that I think people ask, and I think where a lot of the resistance comes, is how does this make sense for the insurance company?
Mm-hmm. That's a great question. And the reason it makes sense for them is, I hope I'm not spoiling anything for listeners, but one thing in life that is a guarantee is death. We're all going to die. And so the insurance company knows it. And so if you have, let's say, a loan out, and we'll just do a real hypothetical here to make math easy for me on your show. If you have $1 million death benefit, but you have $100,000 outstanding loan because you went and bought some real estate, like George would do, right? And so you have an outstanding $100,000 loan. Well, what they'll say, if you pass away, they'll say to your beneficiary, you know what, George had a $1 million death benefit. He did have a $100,000 policy loan out. So we will pay you $900,000 now. And so they know they can recoup that money. And then also that it's an interest only loan. So they do make some money back on it as well. But that's really, that's why it's actually one of the most secure loans they could make. And they like making certain companies, the right companies like making these loans.
Because they're structured properly. Makes sense.
Mm-hmm.
Got to be a win-win. You mentioned that you studied some people for which infinite banking may not be right.
Mm-hmm.
Who would that be?
You mean like people who were opposed to it, or people who it's not right for?
Yeah. Who would you say, this is just not for you?
Yeah, I would say, I think it can work for everybody, but I think it requires a mindset shift. So there are some people who whenever my first call with someone, I ask them, like, do you consider yourself to be fairly open-minded? And I think that's really important, because if you're not, I pretty much will say, I don't think we'd be a good fit, And so it's a lot of times, maybe people that, they just like to follow traditional rules, and that's okay. And they like to follow traditional financial advice. I even have family that they don't do the infinite banking thing, because they're very, well, my financial advisor says this, and that's what I'm going to do. And so anybody who's, that's their, and everybody, there's no one correct way. I think this is a way to put power back into people's hands, and that they get control of their money supply. So I would say people that maybe just aren't open-minded, maybe a little bit closed-minded. And it's a process. Sometimes people, they may not be open-minded right now, but 5 years from now, they change their mind, So that'd probably be the main one, I'd say.
Right. Well, you also do have some money locked up. I mean, you can borrow against your cash value of your policy, but is there a limit to that? How much can you borrow against it?
Yeah. So, you can borrow basically as soon as that policy is open, you can borrow against it. You can borrow really close to about 100% of it, like it's like maybe 98, 99, and they hold some back to pay back the simple interest. But so so you can take pretty much all the cash value and use it. Was there another part to that question? I'm sorry.
Well, basically the idea is, if you're able to use the whole thing, then there's not a whole lot of money tied up. I mean, you do have some money tied up in the sense that your entire policy is not cash value, right? There's some drag to it.
Mm-hmm. Yeah. Yep. There is some drag initially. Yep. Something we always chat with people about. And the reason, we like with working with real estate investors and entrepreneurs is, I'm sure you're this way, George, is that you think long-term, so you don't say, oh, hey, there's some cash drag in year one, this doesn't make sense. You look at year 5 and year 10 when you're putting in $1 and you're getting $1.25 that you can now loan out to yourself because of that uninterrupted compounding. So yeah, there are some, some cash drag things at the start as well.
Yeah. And then you mentioned 2 to 4 years as your time frame for getting things rolling. And what sort of contributions do you need to make to the plan in the meantime in terms of premium?
Yeah, so everybody's situation is really different, and we don't do like a one size, fits all. We definitely try and, whenever I work with someone, I talk about what their goals are, what they're doing in their real estate, what they're doing in their business. And a lot of times one thing that does happen is most people start a little too small, and then they come back, within 6-12 months and say, I wish I had started bigger, because they find there's a lot of money that is just sitting, dead, maybe for repairs for the real estate or for taxes that they set aside. And so, everybody's funding level is different. I would say, I shouldn't give a number. Everybody's number is different. But we'll have people that do as small as 5,000. We have people that do up to $1 million a year, and it really just depends on your specific situation and your goals. And then, like I mentioned, as soon as it's funded that first year, you can take a loan against it right away. But we do want to overfund it for about 4 years, so you keep getting that cash value built up. But we, say use it right away. Use it. Find a deal. Go use it.
Nice. So you're saying there's not really a certain amount of money. You're not going to tell people, well, unless you have 100,000 or $1 million to contribute to this, that this is not for you. So
right.
Definitely not one size fits all. You mentioned that this is like not an either or thing. This is basically, one from each column. You're not doing this and saying like, well, hey, this is an end in itself. Of course, you're using this to invest in other things. For you, this is mainly real estate. So maybe you can help us understand how the two fit together. What are you doing in real estate? How does infinite banking help you?
Yeah. So, I found infinite banking around the time I was doing mobile home note investing. And I've since switched, and my wife and I are looking for, apartment complex. So right now, the way that, we're going to use it is we have money set aside in our banking system, in our policy. And, we're still going to leverage banks' money, right? Because interest rates are crazy low and cheap. So you wouldn't be very smart to not do it. Some people don't like that, but whatever. So, we're going to take that and use that for our down payment, right? And use it on a down payment for a multifamily deal. And then we're going to use other people's money to pay it back. So we're going to use the insurance company's money to do the down payment. We're going to use other people's to pay it back. So that's our, current plan. I know, people who, that when they set their money aside, there's, a couple investors I've met who, when they're setting any money they're setting aside for, taxes, insurance, and all of that, they will actually take that money and put it in there and then go lend it out to like flippers and have the flippers, and they'll charge them, a hard money loan. So that, there's lots of various ways. I've also used it to buy some Bitcoin as well. And then I store it, I've stored it on like, where you get a high yield savings account. So I use the high yield to pay back the loan instead of me paying back the loan. So there's lots of, so there's lots of different, and that's one of the beauties of it is like, whatever you're into, whatever you think is the right investment for you, you get to make that decision. And so there's not a one size fits all even on what you invest in, but there are lots of strategies that you can use and lots of people doing different things.
Cool. So you mentioned, I think, single family mobile homes, notes, which you generated from selling those mobile homes, I believe. Mm-hmm. What's the next step for you in real estate investing? Yeah.
So my wife and I are we really are looking in this area in Omaha, anything within about an hour radius of here. If anybody knows a deal, on your show, give me a call. But we're looking for about, 5 to 20 unit apartment complex. We've looked at a lot of deals the past 5 months, haven't found the right one for us. So we're just trying to be patient. Even just last week had a duplex come my way and I was like, well, I would do a duplex. So that's kind of our next genesis is like, we didn't get into this totally, but when I first got into mobile homes, I still had a little bit of scarcity and I didn't understand, good debt versus bad debt. And so I got into mobile homes because I could pay like $500 cash for a mobile home, and I could, provide a note. I could get a note. I could get someone I could finance it basically and have someone, I could carry a note. And so, but it's not really something you can scale. There's not a lot of great tax benefits like there is in multifamily. I have a few people still paying me like about $300 to $400 a month, but they're paying me $300 a month from 2 or 3 years ago, which is not the same value now. That $300 is not worth the same now that it was back when they were paying it. And I can't increase their rent, right? I can't increase, it's not rent, so I can't increase it. So that's kind of why we started saying, there's some definite value and things in multifamily that we should probably switch over to. So, and it wasn't as passive as I wanted either. It was like, I was gonna have to be putting in 60 hours to really scale that business.
Awesome. Yeah. People talk about getting into real estate without a whole lot of money. Mobile homes, in addition to other things, could be a good avenue. So very interesting. But you don't buy the parks, you're buying the homes and renovating them. Is this like a fix and flip strategy? Yeah.
So I'm not a handyman. So I would get them for very cheap. I think the most I ever paid for one was $3,000. So you get them pretty cheap and then you fix them up it's basically, you sell them as like a handyman special. There's a lot of people who live in mobile home communities who are very handy, and mobile home repairs are very specific. Like a handyman that can work on a home, a lot of times doesn't know what it takes to fix up a mobile home. And so you're not going to sell a lemon, like you want it to be where it's livable. But then you can sell it as a handyman special. And typically you can get your down payment, like when they give you the down payment, that typically is when you've already made the money back that you've had into it. And then, you're making $300, $400 up to $500 a month, on the payments for however long you structure that deal. And so, there's some definite benefits, and I got into it to get my feet wet, to really understand real estate. I kept saying to people, I want to do real estate. But it's like, well, I need to take some action. And so, for me, it was like, hey, you know what? The cost of entry is low. The cost of quitting, if I quit, no big deal. I did later realize like 3 parks sold while I was going in and out of parks. And I was like, man, I was thinking too small. I was kind of kicking myself. Like I should have been looking at parks, like you said, it's like, so I know a couple of guys who are doing parks, and, hoping someday we do a deal together as well. But yeah, that's something I wish I had looked at parks instead of the notes first.
Right. Well, I always like to ask people how they've been using this pandemic timeframe. And I understand that you've got at least one other entrepreneurial venture outside of TenFifteen and also outside of your infinite banking that you've been working on?
Mm-hmm. Yeah. So, my wife, is that you're referring to? My wife had created a business. Yeah. She'd actually had, she had worked for 3 or 4 years to create this business, had investors and all sorts of things. And, when the pandemic started, we were about to start it, but we hadn't yet. And it would not have worked during the pandemic. And, we probably would have gone bankrupt. So we're a little lucky there. But she pivoted her business model and started providing on-site tutoring for, parents that still had to come into work at the time, but their kids were all doing, school through Zoom. So, she really, I have to give her full credit. She was the brainchild. She set it all up. I really was like the CFO. I did all the financial stuff and I helped obviously with things here and there. But she provided tutors for, a large company here in Omaha and nationwide. So, but she knew it wasn't going to be her long-term thing, and she's also got an e-commerce thing going. And again, I'm her financial CFO guy as well. And then she and I are doing the real estate together. So, but we're very entrepreneurial. So we're always kind of talking about, the next thing that can provide some passive income. And I'm trying to talk her into doing a podcast with me right now. I'm not sure I'm going to get her to do it, but yeah, so we always kind of have things we're working on together.
Awesome. Any tips for getting your spouse involved?
Yeah. In real estate or in your business?
Yeah, either.
Yeah. I think it's actually, it's interesting because I've been interested in real estate and doing this stuff for a while. I don't think mobile homes got her excited. And so I've been, just kind of talking to her about it little by little, but not pushing. And really just recently, she's been more interested. So I think it's just, keep having conversations. If they're not interested, don't push it. I think once she started seeing there was passive income from the notes, that made her excited and was like, oh, okay. Like I get a little bit more while you're doing this. If you can get them to listen to, she likes some Bigger Pockets stuff. So that's really helped. Bigger Pockets podcasts and any kind of, if you have a wife that's into podcasts, I would definitely recommend that. So sometimes I'll send her a few of those. So she may not read the real estate books as much, but she did like the cash flow quadrant book. She did like that.
Cool. Well, tell us, what is your most important lesson that you've learned in your investing career?
Yeah, I think it's, so I mentioned the guys that I have 2 lessons, I guess. So I mentioned the guys that I met that were buying mobile home parks, and, they told me like, you're playing as an individual in a team sport. This is a team sport. You should, you could think a little bit. Basically, they told me like you can think bigger, because I was just looking at, mobile, these small mobile homes and flipping them and just doing that business and not really connecting with others. And so they really just mentioned real estate's a team sport. The other thing I'd say that is a big lesson, and this is for me in life, not just real estate, is finding a mentor and a coach. I didn't go do the mobile home thing solo. And infinite banking, I didn't do solo. I've got mentors, business coaches, and so I think that's huge. You need people pushing you. You can be very driven, but everybody with a coach is going to do more. And if I didn't have a coach, I found my first mobile home deal in a month after hiring a coach. So I think that's, really important in any area of life.
Tell us some of the books that have helped to forge you as a leader and as an entrepreneur.
Man, there's a lot. So I'll say I'll give you one as a person that's really helped me the past few years. It's called The 4 Agreements. And that one I come back to every year. It's just, personally keeps me really grounded, really good. The other one last year that was really impactful for me was The Go Giver. I had never read it before. I had heard seriously 10 plus podcasts where people were like, you need to read The Go Giver. It's so good. It really is. It's a quick read, but it's a very good book. And so that's another one that's helped me a lot too. It helped me switch my mindset around being a taker, being someone that's always trying to get something from others instead going into it and look to give first. And that really impactful for me, and especially in 2021.
Okay, how about what's the best advice you've ever received in real estate? And how about the worst advice, or maybe a mistake that you'd like to help others avoid?
That's good. I would say the best advice was the team player one that I mentioned. I would first say that's been some of the best advice I've gotten. I started going to meetups and meeting people, and it's been really impactful, and I've made good friends from it. So I would say that, being a team player, looking for good people to surround yourself with. Worst advice, I would honestly say it's probably, I was kind of encouraged on my, first few deals to find handymen that were on the cheaper side. And, I had one project, I went through 3 handymen, all because I went cheap. And if I had just found a good handyman, for the mobile home, I would have saved myself a lot of heartache. And even when I sold the home, there were issues afterwards. It just was really a bad situation. And so, I ended up fine. I profited very well on it, but it was a lot of stress for like 2 months, and just a lot of issues with it. So I would say, a lot of times it's that saying that you get what you pay for is true. And you don't always want to go with the cheapest. You want to find good people, and that's really important. And so I kind of switched my model after that a little bit, because I was just looking for the cheapest, and that really wasn't working for me.
So true. I hear people tell me all the time in real estate, I'll tell you my flooring contractor, I'll tell you who I use for painting, but I'm not going to give you my handyman. that handyman is very, very valuable contractor to have on site.
Yeah. I had a funny story. I had a painter. I bought the paint, brought it, dropped it off with him, and I left, and he stole my paint. And I was like, I was going to pay you more to paint that house than that paint is worth. But again, I didn't do my due diligence. I didn't find a good person. I kind of, I went cheap, and he made me pay. Literally.
Yeah.
So
yeah, I love it. Letting the contractors charge you a 10 or 15% surcharge on supplies is a bad thing, but the first time I've heard of that one, that's pretty bad.
My wife and I were leaving town. We couldn't believe it when we got back. I was like, it's not painted, and he stole my paint. Oh man.
So maybe that's a story on the sadder side, or the darker side of the street. Can you send us out with a heartwarming story from your entrepreneurial journey? Maybe somebody you're able to help, or tell us how you're able to improve a neighborhood or a community.
Yeah. So, a lot of people think when you're doing the mobile home thing, like I had friends call me slumlord and stuff. But one of the last deals I did, before I kind of transitioned to this, is I got a home that was basically, like pristine, had been fixed up, and I got it very cheap. The lady just, she asked me to take it. She was like, I need to get out of town. And I still gave her money for it, obviously. But she didn't want very much for it. And so I knew I could get, a lot higher price for this home. But I met this lady. She was a grandma, and she was living with her adult children and their kids. And she was just very frustrated, because basically they were, using her to babysit whether she wanted to or not. She was very stressed out. And so she'd been looking for her own place. And so she, basically comes to me and says, this is perfect. I can have them over, but it has this beautiful yard. I'm telling you, I'm not making this up. Very beautiful mobile home. I'm not kidding. And a wonderful yard, and had fenced in yard. And so she was so excited and grateful for the opportunity. She couldn't quite meet my price. I worked with her. And she still she sent me like a thank you. And she called me like a couple months later. Very grateful. And I'll give you one more. And it's just that I also worked with this family that was Hispanic. They owned a Dunkin' Donuts. So they're very, very successful family, but they couldn't get anybody to rent to them locally. And they felt like they were being discriminated against. And so they said, and then I found out that the place where they were renting, their landlord wasn't fixing anything. And so they were using the restroom at their Dunkin' Donuts. Their entire family would have to come in, use the restroom, because he wasn't fixing things. And so they said, I never wanted to live in a mobile home park, but this, again, I got another one that was just it had been remodeled within the last year. And so it was humongous, 3-bed, 2-bath, huge carport, huge yard, shed. And so they were so grateful for the opportunity to get out of this slumlord situation. And then also they couldn't get, like, they owned 2 businesses, owned their house in California, but banks wouldn't loan them money for a home here. And so it was just another situation where they're very, appreciative and grateful for an opportunity to own their own home and have control of that.
Awesome. Heartwarming indeed. I want to thank you for coming onto the Foundry today, Drew.
Yeah, thank you for having me. I really enjoyed chatting with you.